Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, November the 9th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember the past performance of any trading system or methodology is not necessarily indicative of future results. Having all that out of the way, let's get it on. I mentioned earlier on in the week, there's not a whole lot of economic data coming out today. It's really up to the markets to kind of discern which direction they're going to go without any leeway to economic data. We do have some Fed governors speaking, but for the most part, those guys are behind us. And we did get wholesale inventories come in line with expectations at 0.3%. And we had unemployment claims coming in slightly higher than expected at 239,000 versus the expected 232,000, and that's about it. Oh, natural gas storage came in at 15 billion cubic feet, in line with expectations of 15 billion cubic feet. But for the most part, not a whole lot of market moving data across the board or across the pond or here in the United States. We got crude oil futures moving slightly higher today, up about 37 cents after yesterday and the day before's pullback, if you will. You know, I talked about this. It just had such a market move to the upside that it looked like it was a little overdone to the upside. We probably see a little bit of profit taking, which is what we saw in the last couple of days. Today, getting a little bit of a bounce. I would expect a little bit more of a pullback without any real data coming out. The market's just kind of moving higher, basically based on some of the unrest that's going on across in the Middle East with all of these guys getting thrown in jail or for different types of money laundering. That is causing oil futures to kind of hold on to this upside. Gold moving higher basically as a flight to quality. I talked about this many times. I was expecting this to go down and test the 1250 area sometime this week. Clearly not going to happen at this point anyway, especially with the overall equities across the board in negative territory. That's going to kind of hold on to some of that value as the equities pull back. But the bonds aren't really reacting to the equity pullback in that flight to safety kind of situation that we're seeing there in gold in a sense. But you know, bonds just really don't have room to the upside, as we've heard from some of these Fed governors that they are hawkish on inflation, and we have seen inflation and the economy start to pick up, and maybe they were a little bit ahead of that curve in a sense, but we are seeing that move up, which would imply that they are going to continue to increase interest rates. So we can't have bonds going up necessarily with interest rates going up as well. Bonds should start to go down as interest rates increase. So today and yesterday we are starting to see a bit of that correction to the upside, or from the upside, I should say. The VIX moving higher back into 11 now. Big move higher as the overall equities are coming off. The overall markets in the equities started to show a little kink in the armor yesterday with the financials really getting kind of beat up. Today, the broader markets are coming off, as you can see with the Dow Jones Industrial Average down almost 160 points from the open, almost just unabated to the downside. Now we'll look at the NASDAQ. It's showing that it has a historical high here and is off by about 56 points as well. But this high was printed right after the overnight session kind of opened up. So if we look at this and throw this in on a 30-minute chart, we can see that the equities printed that high yesterday at around 5:30 my time, which is a little bit about 7:30 p.m. Eastern time, and the overall markets just never looked back on the downside. We got a little bit of a rally right after the open, but that was basically as overnight inventory gets short they come in wildly to cover the day session, knows that they're short, and kind of pushed it against them for a little while till probably they mostly puked out, and now continuing to the downside. Same situation in the E-mini S&Ps. That price was printed probably around 7:30 Eastern time overnight session. So that isn't really going to be looked at as a milestone for the equities. That usually has to get printed in the day session. So that is going to be a point where we are going to revisit in the future, because the day session really wants to have that print during the day. But right now, a big engulfing candle today in almost all markets. I think the Russell was holding up a little bit, and so was the IWM, but at the most part, we're seeing a bit of a pullback here. Then, if we look at this on the day session, we're going to see a very similar situation here, where that overnight high printed in the overnight session. The market got very short on the downside coming into the day session. The retreat as the shorts rallied into cover, but now, as you can see, this is the last doji, and we are very near the lows of the day. So market really feeling pretty bearish today. So having said that, IWM came out with better than expected earnings. I've been playing this because, they have continued to hold on to some of that volatility, and we would expect to see that volatility start coming out after that earnings. But because it made such a big move to the upside, some of that volatility was held on in there. I mean, we did get a little bit of a volatility coming out, but now that we're back below, this actually, the starting point after earnings acted as a support right here in that line in the sand that I have. Today we've broken down below that, so I decided to go in there and take advantage of some of the high implied volatility in there, the directional move, breaking below the support, maybe looking to go and cover that gap, because a lot of times in these markets we'll see when they have the gap, they want to go, the market wants to try and go and cover that. It may take a while sometimes, but in other instances, it will look to try and cover that relatively soon. And we could easily see this want to come down and try and at least cover most of that gap. So I decided to put on some short deltas with the broader markets coming off. Adding some short deltas to my portfolio seemed intuitive, if you will. So I went in and sold the December 240 calls for 47 cents. And I only did that in my margin account. I need to hold off on some margin in my IRA because I want to trade this Disney earnings after the close today. So I'm going to be looking to play Disney. I'm thinking I'm going to play that to the upside. A lot of this hurricane did affect Disney, but I think that that's going to be baked into the cake at this point. It's been past us a little bit. There's been some adjustments and things of that nature. They really didn't get damaged as much as some people thought that they would. Orlando's right in the center of the state, so a lot of that damage was on the periphery of Florida, and I don't think that Disney is going to really be harmed that much for that. So I'm going to probably be playing Disney to the upside in both my IRA and in my margin account. They have really high implied volatility in and of that hurricane and the earnings coming together. XLV, don't have this in my margin account, but I played this back here on the 19th of September. Got in here, got the directional move here, but it happened so fast, and that's what we see a lot of times with these long put spreads, is sometimes when you get that move really fast, it doesn't have enough time to decay on some of those options on the short option. That is the case here. And then, as you can see here, I got the move that went against me. And in this XLV trade, I went in there and did the November, bought the 84 puts, and then sold the 81 puts also to kind of pay for some of that extrinsic value of those 84 puts. I originally paid $1.39 for those, but the directional move was against me. And when we saw the volatility increase with this particular strategy, the volatility increased when the directional move was against me. So it did hurt, but probably not as much as I would have if the volatility had come out. So as you can see, it came up and tested my long 84 puts. Looked like I was going to be taking a full loser on this trade, but in the past few weeks, I've gotten the directional move in my favor, and that volatility came back out of the trade, which allowed me to get to my max profit. Now, when it came down here and slammed down to like these 80s, it still hadn't decayed enough to get to 50% of my max profit on that strategy. So I kind of needed to stay in there. And today I was able to get out for that 50% of the max profit. So now if you remember, I did the November, bought the 84 puts, sold the 81 puts, and paid $1.39 for that strategy. So today, if we look at what is 50% of my max profit, well, $3 is what you could collect at the end of the day when this strategy completely ends up outside my 81 puts at expiration. I should be able to get out for like $3. So my max profit potential on this trade by paying $1.30 or $1, let's say 40, would be $1.60. So my max profit I'm looking for is 50% of that $1.60. So 80 cents added into the $1.40, let's say, that would be getting out at $2.20. I got out at $2.18, and that's what that fill you heard was happening. So able to get out of that. It was only in my IRA. Friday's webinar, we're going to be doing a strategy that is the put Christmas tree, and it's also in the butterfly family. Some people call it the 1x3x2. I call it the Christmas tree. I'll show you why we used to call that a Christmas tree on the floor, but it is in the butterfly family. It's a really good strategy to kind of add a little bit of more directionality, if you will, but I'll show you how to set that strategy up to increase your probabilities of success. All right, so go to protraderstrategies.com, sign up for that, and if you can't take that, take it easy.